where the level 1 is. So you can see the price kind of comes into this area, comes down to the green line, rallies back off the green line, starts to roll round the green line, comes back down through this phase here. Max is still looking for a trade here, still looking. Max is still looking, Max is still looking, Max is still looking for a trade here. And that's obviously where we're now at. That's where we're now at. So when we break through the bottom print here, you can see that Max finally ends up with this trade here. Max finally ends up at this point here saying, right, we've now got level 1. When that switches off, it now establishes this line as the 1 point. So this becomes the 1 point. Understand? So the line switching off establishes exactly where the number 1 point is. And that's where it is right there. So when the price breaks through that area, this must be the 2 point. This must now be the 2 point right here. Now obviously on the 2 point, this is where we should really start getting active. If this is where we should start getting really active, does everybody see what happened at the 2 point? That was our equity trade that we shouted in the room. This was the equity. Remember we shouted the first buy on equities when it dropped through here, and then we started to buy again when it came back down again through this area here. And a few of you guys joined in. You just joined in on a max buy trade at level 2. You just joined in on a max buy trade. And obviously that max buy trade has just came off that bottom print price of 24s up to a high price of 31s for 7 points, $350 of profit. And then you can see how that storyline has evolved from that point very, very, very nicely, hasn't it? Very nicely indeed. And a good, solid max upside buy opportunity. And that's the idea behind this process, isn't it? This is the idea behind this process. As you can see that it's hunting for a trade, but it's not getting a trade. And that equity, by the way, is just starting to break north out of that 31 print there, just up into 32. So that's a good outcome, guys. That's a very good outcome from that final bottom edge trade right there. So it just gives you an idea. It gives you a better quality of an idea about how this storyline is evolving in terms of the idea that the whole point about Max was to try and show you that it follows the same logic as what we teach in the classroom. It's not something alien or removed from what people understand, and it was quite important to me that we did follow the same logic in Max as you guys were getting taught in class. So it had a kind of requirement that was a necessity to achieve that, guys. So and I think we're getting there with that storyline. How did our sell-side bonds do? Ultimately, sell-side bonds did pretty good, guys. We told you we should be selling on pullbacks, right? That's the trade today because of the Fed. Selling on pullbacks, selling equities on top edges. We suggested that chat to Jack earlier about QT, and the chat with Jack earlier about QT was what? What did we say, Jack? Selling bonds at top edges, selling equities at top edges. Is that what we said this morning? I think so. I'll tell you if I said so. But I think that's what we said this morning, was sell top edge bonds, sell top edge equities. And you can obviously see that that top edge equity has been a relatively safe, consistent top line sell, and the same for bonds. Selling on pullbacks on bonds, for example, seems to be the most consistent play going. And that's just the way it's been playing out so far today as well. So all good. All good. All good in the hood.